Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Could I please get a screen and audio check in YouTube and the Bookmap Discord Trader Lab community? There you are, Marty. Thank you. Thanks, Dan. Thanks, everybody, today for visiting the Trader Lab. Quite an interesting day. Thank you, Plato. Well, good morning, everyone. I'm Tom B., and thanks for visiting the Trader Lab today. I stream live Monday through Friday, 11:30 to 1 p.m. Eastern Standard Time. This stream's about integrating Bookmap order flow tools with auction market theory using the volume profile as a chassis in the intraday developing time frame. It is based on structured trades that are available to everyone at no cost in the Bookmap Discord Trader Lab community, as well as a library of webinars on the process you see here every day. Now, the thing about the Trader Lab is to understand it's about the business of trading. The business of trading is really understanding where your trades might show up and then anticipating them and then being prepared in the sense of if you see the triggering structures that you vetted at vetted locations where you have a statistical edge, and your job, if everything lines up, is to engage and accept the random distribution of outcomes. No different than how a casino operates. Casinos only play games that have an edge, and they accept the random outcomes because they have no control over cards or gamblers' play. They only control how they play the game. We're in the same business. So we have a business model we overlay trading on, and that is gaming because it's a proven model. Now, how you put trading and align it on top of a gaming process is part of the challenge for developing traders. The work required to know where you have a statistical edge versus just participating in noise in an environment that's 100% random anyway is challenging, to say the least. And in between waiting, we are constantly stimulated by our emotions to take action, fight or flight. All kinds of behaviors take place psychologically that disrupt our ability to function in a random environment, despite even doing the work and having a statistical edge. You have to execute the plan with precision, and this business is measured really by your performance in relationship to your plan. And again, everybody's mileage may vary, and past performance is never indicative of future results. General disclosure: all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this is not a trade calling room. This is for educational purposes only. If we get into real time, we'll talk. And those of you who are interested in what you see here, every day I do a stream, and every day it's the same. Not the stream, because the market is different, but the process is the same. And if you consider what this business actually is, it requires a consistent process. Now, I always start the same way. Higher level overview. What is the condition of the market? What has it done recently? What has it done in the ETH? And then what specific trades might we anticipate? Where might they show up? How do we integrate process and triggering structures, trade management, etc., scaling, which is an individual thing subject to the rotations or time frame you operate in, and the rest, targeting. It's all statistically based, and it's all random. So let's look at what has happened. Well, we all know that we did the Acapulco cliff dive here on the tariff news, and quite frankly, the market, in my opinion, is still leaning to the south side. However, the market never moves in a straight line. So let's kind of take a look at what we had. We had our sellers here, tariff day. We have rotation up to squeeze out the sellers. Market goes down to go up, and then goes up to go down. Market goes down, put in a tail, to go up, and then we go up, this is yesterday's RTH, to go down. Now, I mentioned yesterday that I was anticipating an inside day. Now, I made a mistake because I was looking at these two candles here as one day. So when I was looking at this, I was looking at an inside day between these 2 days. So I misspoke, but that's what I was looking at because I was analyzing this as one day. Tail here, tail there, meeting in the middle. Have you ever seen that old photo of when the Union Pacific, and I forget the other train line, where they met somewhere out in the middle of nowhere and they used golden spikes when they put these train lines together? Old picture, very interesting. Well, that's what this was, the meeting in the middle. And then it's what happens. So yesterday, we were trading both sides yesterday, which is fine. And today, of course, is like being a whirling dervish. So what do we know about yesterday? We came out, we squeezed out the stops above this high. So the shorts that were in here got thrown under the bus. Then after the squeeze, it sets up shorts coming back across the range. So that's kind of where we were. But now let's look at the end of the day, what's called this is RTH, only candles. So this orange line, as of the day before yesterday, was the fair or retail price. And that's based on in the auction where high volume is. Auction is shopping. You find a fair price, there's high volume. Think of it as retail. If the price gets too high, you're going to run out of buyers. I'm not paying that. And then if the price gets too low, you run out of sellers. I'm not going to sell that to you. And we do this. Well, what happened yesterday was the fair price for these 3 days shifted down to here. So the fair price is 72.25. Very important to remember that. So what that sets up for us today is the possibility to take out this high, take out this low, either one or both, and come back to 73. So rotational trading. And then again, so we have under here sell stops from this tail, and we have stops above here. So outside in, potentially outside in, or fall out the bottom. Why might we fall out the bottom? Well, trend is down at the moment, in my opinion. Now, how you operate intraday is subject to your own time frame or fractal. And when I get into the developing time frame, there is no time for me. It is really based on fractals. So in order flow. So when I use a high tier tool like Bookmap, what I'm doing is I'm taking all of this behavior and then I am bringing it down to a micro level for potential triggering structures. Now, today has been extremely unusual. Part of that has to do with tweeting from the administration, tariff talk, a lot of disruption to the auction. And when you have inputs that come in at any random time, which can happen anyway, the market is going to react to it. And it can react violently and create a lot of rotations, cause a lot of trade failure. This is part of trading. It's part of the randomness. So in our business, just like in the gaming business or the way casinos operate, we are always operating in randomness. So reports coming out that are anticipated disrupt the auction. Elements that interrupt the auction, like news inputs, tweets, somebody tripping over the cord at the CME, all of that has an impact on the auction. And what happens when there's an external input, it is a disruptor. And what happens to the auction? Well, for depending on what the input is, the participants are going to auction that news and try to find out, based on the participant behavior, not our personal opinions, what does it mean to the trade? What does it mean to the participants? How does this potentially impact the pricing or valuation of the market? Well, those inputs will then get processed or auctioned by the participants, and we'll start these rotations trying to figure out, well, is this still too high? Oh, it's not too high? Are we just going to squeeze, take stops? Are we going to rotate the other way? And all of this, we don't have the answer to because it's random. So what we need to have is a trade plan that provides us not the certainty, but the answers where we will observe behavior and potential interaction. I hope that makes sense. So now, RTH open. Based on what we know, let's look. Previous high, yesterday's high. Stops are sitting above yesterday's high. Let's see if there's anything up above. There's a single up here, and buy stops are sitting out here. So we have yesterday's high, and this appears to be a single that was left behind. So let's look at that. We have our overnight volume point of control, the retail price from the ETH, in other words, retail, high volume. So volume point of control is an auction-based or volume profile term that means retail. Now, the joy of all of this is retail moves around. This is an ETH variable high volume node. It might be resistance. It should be on your chart. O2 is a key level. It should be on your chart. RTH open, retail from the ETH, overnight mid. This is the naked volume point of control, yesterday's retail price. So I have a sequence of shopping. This is the highest volume from yesterday. So if we come down, this is a potential target. I also have overnight high, overnight low, and yesterday's low is also open. So RTH open. Now, I found today difficult to trade. And by difficult, the volatility and the sharp reversals and the chop made it harder for me. Now, I have to tell you that because it's just the way it is in trading. Sometimes it seems smooth. Other times it's very choppy and contested. Today was very contested. It seems to be simmering down at the moment, but hard trade. So I ended up, because of the volatility, I took a lot of trades. And when I take a lot of trades, you know what happens. I take a lot of stops. So for me, I took more stops because of more trades. And also I got a lot of scales and then scratches. So, you know, it's frustrating, but that's an emotional response. It has nothing to do with trading. So RTH open is here. Now, given the volatility, I looked at this, and then what I determined was we were going to have an open auction. So I waited because I found it very conflicted. And I know we had a report coming out at 9 a.m. And so just generally nasty. So I always tell traders, or I don't tell anybody anything, but let me rephrase that. I always suggest the last pace anybody ought to be trading is the open. And I consistently say that because if traders have FOMO, they're going to trade the open when they absolutely have no edge because they haven't vetted it. And if they can't trade the other areas, then they're not going to be able to trade the open. One moment, please. Getting some noise here I got to get rid of. Okay. Sorry about that, guys. So market comes up. Now, what I'm thinking here is mean reversion. So I started out with the idea of mean reversion. So shorts. So I kind of came into the idea I want to be fading it. And why would I fade it? Now, in hindsight, you always ask yourself, why do I do anything? Well, that's the benefit of hindsight. When you're dealing at the hard right edge, which is what this is, you got to take your plan. Now, so what I'm looking for is two-sided trade, and I'm looking for mean reversion trade. So for me, my orientation, if I go up first, I want to come back down. So I'm looking for shorts. So let's see what happens here. So this is my first trade, and the job is to come back here. I get this. Now I'm already in the trade. My stop is up here, and I'm trading just primarily back to here. And then it's to come out the bottom. The other part of this is we have something called the overnight volume point of control sitting here. This is the retail price. So here, this test is potentially saying it's too low. So I know I've got this and I've got this. So these are both means, a mean being a fair price. So I know if I get short, this is my primary target. And if I can fall out the bottom and get below this, I can hit levels below. When I say I know what might happen. I don't know what will happen. So anytime I say I know something, I'm really referring to my plan, not to what the outcome will be. I'm going to show you microstructure right here. I like to just do this, and then I'm not going to do a lot of that today because you see this every day in the stream. Now, remember, guys, do you have a trade plan? Do you have a pre-flight checklist? Do you know what you're going to do before it shows up? If you don't know what you will do and where you will do it, you just don't have a plan for that specific condition. For me, I am on the shorts. And I know we have an interesting conversation about this all the time in Trader Lab because other traders are taking longs. And there's not anything wrong with that. There's not a right or wrong. It's really how do you interact and where is your edge? For me, I prefer, and that's just the term, to trade with the higher time frame. And for me, I perceive the higher time frame. Whoop, trying to get this thing in here. To be down. So I'm using rotations to get short. Now, this is a structured trade in Trader Lab. Let me just show you the triggering structure and the entry. So up here, now, yesterday's value area high. Isn't that interesting? So now for me, I'm looking at multiple pieces, but the thing that I know is, there's a couple things I know. 60.02 was the previous retail price in the higher time frame. And I open below it. If I come back to 60.02, which is there from below, and it's too high, I can reject it and counter rotate. And then I'm looking for 73. Just saying, who knows? So I come out here, 60.02. There's no precision. So when I'm looking at 02, I'm looking here. I see the sweep right here, and it says level. I'm looking for a short. So right here, I get let's just look at this. I get my structure, and I need it to break low out of this, out here to put the order. It breaks high. So I go, I'm glad I didn't do that. Wouldn't you be happy? Happy. There's a word. Now, I come up here. Location again. I'm testing this. And understand, please, that in the auction, when you go up in higher time frames, and I showed you the RTH, and to me, that's a intermediate time frame, there's slop. There's no precision. I don't put my order out and go, it's going to stop here. Come on. This is trading. It doesn't need to do anything. And especially nothing that we think. I mean, we're not material in this. We're just trying to catch a ride. So up here, and again, I don't know. What I see here is I see stops. I see stop divergence. I see buy stops, I should say. I see selling icebergs and another selling iceberg. And I don't know. It's a chop. What is this? It's a chop. What is this? It's a chop. What does it do? Breaks high. That's not a short. What happens here? Break below the buyers. Order flow. Then what? This is a trigger, but it's advanced. Now, it's not what you should do. I'm going to say is Subject to your skill, you could be selling this here or you sell it here. In the Trader Lab, and it's up to you. If you need, and I'm a believer in structure and a structured process. That's called structured trading. That's what I share with you guys in Trader Lab. You put your order there, one tick below. Your stop is 3 ticks above here, and it's going to put you in around a 3-point stop. If you develop proficiency and you enter a little better, and don't try to do it early because you'll get stuck and caught more often until you can read order flow better. This is, and again, you have to vet this where you trade. And then your job is to get risk neutral. Where is that? Here, variable high volume node, and this is called mean reversion. Outside in trading, you're trying to go here. So let's see what it does. So you get scaled. Now I'm looking at this and I'm going, well, where might we go? Isn't that a wonderful question? Well, this is the next target, 59.80. Let's go back. Where did the levels come from? Wait. Yeah, 80. 72. I think it's 75. Let me just make sure I got the right level on here. Oh, it's this one. For some reason, I believe it's 70. Let me check that again. It's bothering me, Well, this was printed, actually, when did we do this? 72 quarter, 73-ish. The target's around 74, 75, because they're not specific, they're areas. So it's going to be down in here, okay? This area. So that's the next target on this short. Don't forget, 74, 75. Okay? So that was my exit. I just take it, I trade to this. This is where I was trying to go on this. So 73, this is yesterday's retail price. We have settlement. So the first short trade for me was this to this. So I thought, gee, and I also took a stop. I got to tell you about that too. Let me just see where it was. Before this trade, I took a stop. Let me just see if I can find it. Where was it? It was here. Yeah, I see the sweep. I get my structure. And remember, I'm not waiting for the break and the return. So I saw this, the liquidity, the sweep, the break here, and I was under this. So I shorted this and I took a stop here. Yeah, I take stops, but this is okay for me. It is what it is. So I just put the same trade on because I'm trying to come here, remember, and then out the bottom to 73, 74 in there. So anyway, took a stop, take this, takes care of the stop problem, right? And then trading the targets. I also took a trade here, but that's neither here nor there. Let me tell you why. Now I'm going to go into the auctions for you guys. I'm going to try to cover a lot of different concepts quickly. There's so many trades that took place. I'm never going to be able to cover them. So I want to give you some ideas of how to think about this. This is microstructure. If it's too high, which nobody knows, we may come back here. This is called mean reversion. Now this, and remember, I'm not a mechanical trader. I'm an auction-based trader. And this can be extremely confusing. And what is confusing? It's changing. And when it changes, we have to change. And what I always suggest in Trader Lab is that you narrate. in a conditional process. If this, then that. If not, then what? So what I do is if this is too high, then what? Then there. Now, if not, then what? Then get out of Dodge. If it breaks down here, so if this is too high and this is too high, then what? Then here. That's a trade. Now, when we break below here, it sets up the ETH low, and I'm doing this, okay? So that's the next target. So you have outside to here, and if you get under here, it sets up ETH low and wherever. Now you get VPOC migration. This is, if you were holding more than a couple contracts, you'd be holding to try to get lower. Now, VPOC migration, two possibilities. Outside, back here, it's called mean reversion. How do you trade mean reversion? Outside, if this is too high and we get back to VWAP in mid, then you're looking for this. Let's see. Not a trade recommendation. Now, so this is a structured trade coming up here. Let's look at it. If this is too high and I break away from it, now this is the retail price. This is the auction. Where are the stops? VWAP and mid. And then what else is there? Outside edge, low volume node. And where does it come? It comes right there. Let's watch. I'm going to throw a line in here for your dining and dancing pleasure. And let's see what happens. Now, what is this? Well, if we're in a directional market, we have structured trades in TraderLab. One of them is VWAP mid to VPOC. But I don't step in front. I know this is material because this is the retail price from yesterday and we left it, so maybe it's too high. I know this is an outside edge of a distribution. And if you watch the streams every day, and especially I was taught when you're in mean reversion, I'm trading in fractals. So the developing fractal or time frame as you think of them, this is an outside edge. And if we can't get through here, which I don't know because I don't remember, we're going to come here. I can squeeze out because there's going to be stops here. So I need to be looking right here for potential short. Now, whatever happens, happens. So let's see what happens because I don't remember, except I know I've been taking stops. I think this might be one. Yeah, this is a trade I took, and I took a stop here. And then I get my VPOC migration. So I'm as excited as you are when you take a stop. So I've had two stops. And the volatility was also a bit nerve-wracking, as they say. So remember, where's the fuel? The stops are here and the stops are there. So right here, I put it on. Basically, I got my trigger at my location. There's my trigger. I entered here and was stopped out like I hardly got the trade on. I come out here. Now, where am I? I come out to another outside edge. Let's look at it. So what I'm trying to do, and I have to tell you, I had a hard time with this today because of the volatility. It was giving head fakes. It give you these short little moves and then bang. I just felt like I was spinning around like a top. So this is a high volume area right out here. I'm just going to put a little line. This is resistance now. We're going to put that. And this is now VPOC migration. So then what is down here then is support. This now is resistance. And I'm looking again for shorts, trying to come back. And it's very tough. I have a swing out here. So there's stops here. I take another short. So I take a short and I get scaled because I know there's stops. Well, I do know there's stops under here. I don't know if we'll ever get there. That's the difference. And now this is resistance for me. So short, scale, helmet, trying to go here and then maybe fall out because I want to be short. Look at the volatility. Those are Trader Lab trades. So if this is what I'm doing, this is how I'm trading. So let's come back. So for me, you guys know I always talk about my trade plan. Not that it's a good one, you know. By the way, notice this, okay? Here to here. VPOC migration. Resistance is here. Outside edge. And then support is here. So if you get below here, you go south. Okay, and we got the stops under yesterday's low. You see? Target. Too low, if you break high, hasta la vista. You take your trade off. Let's watch now. You guys have questions. I'm going to try to now get current and narrate this in real time for you. But this is very jumpy thing, you know. Variable high volume node. I'm going to mark that. And we have an LVN here. All this is important. This is resistance. So I can be taking shorts under here. So if I come out and I test this, it's at a low volume node. I'd be looking to short it, not a recommendation. And now support is over here. And we have the potential to rotate for the time being. Now I'm going to come up for oxygen. I think I labeled that, so I don't need to do that. So I'm going to put a little level thing over here, and I'm going to put one down here. Why? Because I have a tendency to forget things. I get distracted. So I know this is here. So what do I know? Too high? Too low? Potential rotation. And what's the trend? Down. So for me today, and I discussed this in Trader Lab, you got to be fluid in trading. So and not mechanical. That's why I always say it's conditions. If this, then that. If not, then what? So if the market, you anticipate behavior and you get it, that's wonderful. If you anticipate behavior and it doesn't do it, then that suggests your current plan and what you're looking for might not be in alignment with the transitions or the current condition of the market. So that's the only way I have found to make a timely adjustment. I don't stay fixated on an idea because in the past that hasn't worked for me. So just like you, if something doesn't work, get curious. Why is it not working? What is it about today that made it so difficult? And it was very difficult for me because I found myself trading extremely actively. And a lot of trades I took, I get a scale, I get taken out, and you just have to keep doing your thing. As long as it's behaving, then your job is to trade it, if you have a vetted trade plan and locations. And if you don't have that, then your job's to wait until you do. It's not more complicated than that. What is difficult, of course, is how we behave. How you guys doing, by the way? How we doing in YouTube? You guys tracking? If you have questions, please post them. Please give a like. It supports the channel, encourages me to continue doing this. And there is no cost to come to the Bookmap Discord Trader Lab community. It's a group of serious traders who've come together to leverage their collective experience so we can all get better. This takes a team effort. Statistical probabilities, data mining, sharing trade plans. How do you prepare for the day? All this is part of Trader Lab, and all this is in the streams. So if you're interested in that, and there's also materials in the Trader Lab that you can download as far as other traders' submissions to how they prepare. All of this is in Trader Lab. And by the way, do you have a trade plan? Now, I know some of us think a trade plan is, if I see it, I'll know it. You know, I'm going to suggest, no, that's not a trade plan. That's gambling. Because you won't know anything. What you need to know is where the trade might show up and then have triggering structures for it. Now, if I wasn't streaming, I'd be taking these trades, you know, and I'd be taking stops or whatever happens, you know. If I took a trade here, I'd get risk neutral and get taken out of it. I get another trigger here. I'd take a trade here, mean reversion, and then I'm coming here. And I'm not saying anybody should do that, but that's how I trade because I don't know anything other than where it might go. I know this is an outside edge and I know that's too high. So if I'm getting short, I got to get risk neutral. And this is resistance. If I take the stops over here, which is very reasonable, and then I see microstructure, and here's the and, I know I have an outside edge out here, which was created by this, and I know this is too high. Those are the things I know. I also know it can change. That's why this is a short. Back to there. And then we're going for this. Why would we go for this? Because we got a sweep and a reversal. So the buyers took over here, and this is the retail price or the highest volume. The nature of the market, is to come back and check levels. Is this too high? Is it too high? Is this too high? Is this too low? So when I take this trade, I'm trying, and this is not a recommendation, I'm going here and I'm trying to get down here. And then it might fall out the bottom. It's not my job. Doesn't matter to me. I'm just taking trades. Now, this is a sweep. This can suggest a counter rotation. Let's watch the behavior here. It's very important what it does here. So now it's trade management. Let's look. What's too high? Microstructure. Right there. Buyers were absorbed. The sellers are here. See the icebergs? Now what? Microstructure. Outside edge of this distribution is right here. The market can come up here. If it can't get back to here, then it's south of the border to the target potentially. Let's see what it does. And these are not trade recommendations. Are you guys tracking? You have questions, please post them. And thanks for visiting Trader Lab. If you're in YouTube, how about leaving a like? Let me try to get oriented here a little bit. This market's moving around, and it's a little, you got to keep moving your charts around to keep up with it. So I'm looking for probabilities are over 90% to come out the first hour's low. We're not too far from that. I don't think. I got to find it. Oh, we are far from it. Sorry about that. We have an outside edge. This is mean reversion trading. Hold on. I'd be low. Okay. So we got to be conscious of this, that we might take it out sometime today or not. 59.24 is a recent low from day before yesterday. And if we come out of there, there's a possibility that we could get down to 82. Not a recommendation. Who knows? So this is our support. We're inside of yesterday's range. If we're going to continue, we're going to take this out and continue south. So let me show you these levels so you see where they are. That's more than you want to see. 82.50, I believe. Yeah, 82.5 is a target, not a recommendation. So this is an area to observe, okay? Do you guys track? Do you have questions? This is Trader Lab. But what this is structured trading, integrating auction market theory, the volume profile, and order flow, using it in a structured process, anticipating where behavior might take place, and then using structured triggers and trade management to trade the rotation or fractal you're interested in participating in. My thing is, since I take stops just like you, I want to get paid when I get on the rotation I'm trying. So I always think of this not about being right. I mean, sure, we all want a winning trade. And I'll tell you, when I take a stop, sometimes I'll bang the desk or say something, and that's a release of emotional energy. That's all it is. So I'm okay with that. I'm not a bad person because I'm letting it out. I'm trying to get it out of my body so I'm not tensed up over it, So it's an outlet. So I do that at times, especially when I miss my scale by one tick. It happens more often than I'd like to think about, but it happens a lot. So now when I say a lot, it happens enough that it's disturbing. But that's not the point. The point is I could probably do better if I entered a little bit better. A couple of ticks makes a huge difference when you're trying to get risk neutral. And that's because of what's called the rotation or harmonic in the ES. It's kind of it's rotational nature or average true range because of the noise. There's just a lot of this going on, So if you're late, you're going to catch one of these counter moves and it's easy to get stopped out. So that's why you got to practice triggers. So you take a random day in Bookmap, go into replay mode, and just practice. Practice narrating it. If this is too high, there's my trigger. My entry goes here. Boom. Here's microstructure. There's a trigger. My entry will go down. These aren't entries. You're training your eye to read the auction. Test, too high, down. What's this? Microstructure, break. What is it? Too high, go down. What's this? Microstructure, break, test, too high, go down. See, so it's not, and then once you learn to read a language, then your job, once you're familiar with what you're looking at, then you can determine, where do I keep my stop? Do I run it real tight because I'm going to get taken out? Or do I keep it a little bit behind because I know the sellers were in control here? You see, do you follow what I'm saying? Maybe I don't put it here because it's easy, because retail traders are going to be micromanaging and pulling their stops. The more stops that get trailed, the more likelihood that if we counter rotate, they're going to get lit up. And then they become market orders and the market goes up. If it goes up, then where did the sellers take over? Here. So if I'm looking at where the sellers are in control, I want to hide behind those guys, because the idea is maybe if we come back here, those sellers will sell it again. That's kind of the idea. And where are we trying to go with this? This is a short. And I should say a target. From here, you guys have questions. This is Trader Lab process, and you can learn this. This is why the Trader Lab exists. It doesn't mean you'll be a successful trader, but it does mean if you put the work in and you educate yourself. RP, you were looking for a long at the open. I also earlier in the ETH, I was thinking that we would continue the squeeze. I was looking for longs also, but it changed. So what I do is I kind of, I look at things, and if it doesn't make sense, I don't do anything. So this is our next target. Now, it's not to the tick. It'd be like 1 or 2 ticks above here. So that's all. This is just one trade. It's all this is, one rotation. But what are we looking at? So let's say, you get shorted 81, 82, 44, 40-point trade. This is Trader Lab. I'm not saying you'll ever be able to get this specific trade, but that's what I trade for, because I don't need a lot of these. What I do need is good trade management, a plan that has an edge, and the psychological ability to execute this plan and take my stops, because my job is not to be right. My job is to follow my plan. I always want to mention this because we all start out the same way. We're looking for confirmation, certainty, and to be right. Okay. Well, how do you measure what is right? I think most of us think having a winning trade is the right thing. The winning trades are the outcome of following a plan that has an edge. It's not the other way around, that trading is an ATM in the basement. It's going to be volatile. You're going to take stops. This morning, I went down, I went up, I gave some back, then I went back up, and I felt like I was in the rodeo, and I said, wow, this is volatile. And it was very jerky. I found it hard because the market would turn so quickly, and it was hard for me to get good execution. And I missed some really incredible trades, huge range, because it ran so fast. It went outside of my window for entry and trade management. So you watch a 40-point trade run away from you. That creates an emotional response for me. So what do? I say, over time, it's not this one trade. It's waiting for the trades, and they have to fit. There's always another bus. Hyde, Jekyll and Hyde is always going to be latching on to you shoulda, you coulda, why didn't you? And you're going to get beaten, for not being a good trader. What is a good trader? Someone who follows their plan, not someone who doesn't get the next rotation because they had a trade, but it didn't fit their plan. Longevity, the potential of sustainability in this business is by following your plan. It's not about the trades that you miss or don't fit. In fact, success is built on following your plan, not the trades that don't fit your plan. So that's the business. And you can learn about that in Trader Lab. Now, the other thing about this, please give a like. So RP, I was open for longs until it became shorts. That's all I can tell you. Oh, the LVNs, I'm getting questions. By the way, would be our target, right? For the short. If I was on this trade, it's a 40-point trade, and then I can be done with the trade. Or, since I have over a 90% probability of taking this out, perhaps either I have another runner or I'm managing my trade. All those are choices you make in your trade plan. 90% probability, past performance, not indicative of future results. And where's our next target if we get going? Here. And again, not a recommendation, It's all like, I don't know. So let's watch. Watch right here. Remember, next target. This is auction-based levels, but we also trade probabilities. So this is still in the hit parade, okay? Questions? How are we doing in YouTube? Please give a like. Hey, Peter. How are you? RP, I hope I answered your question. I think, the thing about this is if I took a long on the open, and I can, just like everybody else, I'll take a stop. I just take a stop. There's nothing else to do. But I didn't have that in my plan. because the trend is down. And I've spent a lot of time recently talking about trading with the dominant side. Now, it's certainly with the volatility, I was certainly going, should I be long? But I have to look at the condition of the market. And the condition of the market, at least for me, was sell it. So, and that doesn't mean, so you can sell it and get pushed out, sell it, get a rotation, get pushed out. And for me, I was at one point, I was starting to question, am I really out of alignment? Because I was getting these shallow counter rotations, either, scaling, getting taken out. And that happened like 3 times. I'm trading the counter rotations and they're being absorbed. So that was a bit dubious. However, by the way, notice where our target was. This is the auction. Now we still have this. So that's still on the hit parade. But that's why if from the short, I'm coming here. Is this interesting to you? This is the Trader Lab. You can learn this. I'm not saying, anything more than it's a way to organize the distribution of behavior of the participants and understand what happened here that made it a target. Can you see why? Now the fact it's a target doesn't mean that this is a long. Since I perceive the trend being down and I trade with the dominant side, assuming there is one, which I think might be the short side, then I'm only trading outside in, mean reversion, because that's how we trade in, one of the ways you can trade in Trader Lab, to targets. I trade the targets. Now, and this is still a target. So, but this is my next target. So I kind of go in chunks. So, this is a 40-point trade. How many of these do you need? So my objective when I trade is not to trade a lot. And I traded a lot today. And that tells me the kind of day it is. Very choppy, very volatile, and thin, and very fast. So I was noticing the fights between the buyers and the sellers, and it ripping. That makes it harder for me because I need some structure. And if the market just gives you a little and then I can't activate and have my plan in alignment. So I just have to wait. Does that make sense? Do you guys have questions? Please post them. Please give a like. First, you're looking for some support? Well, RP, I think, any trade we take, it's because we think it's the right thing to do, assuming we have a plan. So taking a stop, I take them every day. I don't like them. What's there to like about taking a stop? But it's overhead and cost of production. I try to detach myself from this thing about needing to be right and knowing what's going to happen. I've gotten kind of to the place where I know I don't know. So when I'm here mentally, I have to put myself, and I posted this, I think this morning in Trader Lab about the mental state and the preparation. All that gets posted most days as far as the context of the market, what it has done, what we might anticipate. And I was, in fact, this morning before the tariff news, I was looking for, based on the ETH, I was also looking for longs. I was looking for a continued squeeze and then to get short. So I was looking for more up and then to go down, So instead, everything changed on the tariff news. So then it was, now what? Well, things are different. And the ETH structure got violated. So it was no longer suggesting up. It was suggesting get short. So for me, that's why when we opened where we did, I was looking for long, not to take the long, but to get short. So I haven't had a long trade today. Doesn't mean there won't be long trades, and it doesn't mean that traders shouldn't take long trades. I mean, for Trader Lab traders who trade, depending on your perception of trend, this is a long back to here. Now, I don't take this trade. For me, it's a target and then an out. Other traders are going to take a long here because this is still mean reversion. This is too low. Think of this. The auction works in, as you guys think of, multiple time frames. Well, this is the current retail price. That's the fair price. And we had left this. Let's look at the story. There's a language. What I'm doing is I'm trading, reading the language. Now, we all talk about indicators, right? Big fans of indicators. Wouldn't we love something to say, buy it or sell it? Well, sure. And those indicators give us winning trades. So we keep pressing on with them because we think, yeah, okay, just got to work harder. The problem is you may have more losing trades than winning trades, and everybody has winning trades, and gamblers have winning hands, but they still leave their dollars with the casinos. So for me, if I want to be on shorts, because I believe that's the trend, I am covering here. I am not taking the longs. This, if you're trading both sides of the rotation, this is a long to here. And that's a TraderLab structured trade. But I have, if I think the context is down, I'm not taking the longs. What I'm doing is covering when I get a long. Does that make sense? And that's only my plan. I'm not saying, TPN, do I trade during the lunch? I trade when I'm not streaming or speaking to a TraderLab participant, which I get to do when I have time. I'm trading. That's what I do all day. Other than this, that's my business. So this is my business, and no, I don't trade. But as far as lunchtime, when lunchtime comes, I continue trading if I have structured trades. One of the things that often happens during lunch is that the ranges contract. That doesn't mean I don't trade, because if I have locations like this and this, so I know right now this is my target for the long. Now, why wouldn't I take a long? Look at this, 40, 30-point trade, right? Well, doesn't matter to me. See, you could take this trade. Anybody can take this trade. It's a structured trade in the TraderLab. So you would know this if you come to TraderLab. Here's what you know. You know where the trades are. You know why they might show up, and you don't know what's going to happen. You don't know the outcome. So that's it. So in the trade plan, now this might be a trade somebody might take, and I'm going to say it might even be a trade I would take. But for developing traders, the dominant side at the moment is the shorts. So this is not a trade that developing traders who haven't vetted an edge would take. They would use the trigger and the sweep and everything else to cover. I hope I'm making a point. It's not that this isn't a trade. This is a TraderLab trade, but it is, I perceive it as counter trend. So if I'm not trading counter trend and only trend, I'm only going to take shorts when they come outside. Does that make sense? And there's not a right or wrong to this. I'm more interested in this stream to help traders learn how to create sustainability. Because if you can't trade one side, you have no business trading two sides. Because you need more time to process the information. You can learn this. But if you can't take this trade from here to there, then you will have no business, in my opinion, taking this trade from here back to there. Because this is a structured trade. But it's a counter trend trade subject to what you think the trend is. I happen to think the trend is down. Maybe. And intraday, it may be rotational. We may if we cross over here, we can take these guys out and come back here. So I know I can't trade here because this is the mean. This is mean reversion. We found too low, and this is my primary target. Then we can come out here. But the primary trade is there to there. And then it's, what do they call it in American football? The Hail Mary pass. Either this is too high, and we're going to continue lower with over 90% probability of taking out either the first hour's high or low. And we could do either. Or we don't get above here, We take this out, and then we fulfill the statistic. Those are the things I know. That's it. I don't know anything more than that. How can I? Right? Please give a like. Are you guys following? This is Trader Lab process and methodology. And the key to this is understanding how the market works. Why would this be a target? If you don't know, come to Trader Lab. Why would this be a short? If you don't know, come to Trader Lab. Why might this be a counter trend long back to here? The 30-point trade. If you don't know, come to Trader Lab. You can learn this, but roll your sleeves up. Get ready to work. It's going to take 150% of your effort to master this business because it is unlike anything you've ever done before. And you do not understand the environment you're operating in. And you also don't understand the psychological impediments of being in an environment where you have no control and it's 100% random. Your reptilian brain is wired to run away from that. I mean, that's survival of the species. It's worked really well when we crawled out of the slime, if you think that's what happened. And we avoided predators through natural selection. Well, your body or your reptilian brain, your wiring perceives this as a threat. So it's going to interfere with your intentionality. And you have no idea what that is because you'll never understand it because you never had to. What you are going to experience is the result of it, which is, why did I do that? Why did I bail out? Why did I not take this trade? Look at that. I could have had, all that. Why did I hesitate? Now I'm taking an 8-point stop instead of a 2.5 or 3. Ever ask yourself those questions? Well, you can get answers in the Trader Lab as far as why and then what to do about it. And it has nothing to do with what your outcome will be because many traders don't have the willpower, the tenacity, or the self-discipline to do what it takes to overcome our problems, to activate and to participate in this business. It's just going to be more than you ever imagine it to be. But come to Trader Lab, ask them. We have traders in Trader Lab who were not profitable, who are now profitable, who trade in the Trader Lab every day, share their trades, share their charts. We discuss, we work together to solve problems. We engineer and do data mining and engineer probabilities. And then we put our helmets on just like you do, and we accept the random distribution of outcomes. And we attempt to manage our emotions, which are the biggest obstacle to being able to sustain yourself in the business. We all take stops. We all have losing days. We all hit stop limits. Let's be real. That's the real world. So there's no fantasy. There's no holy grail. There isn't that one indicator that, like you see on YouTube and out on the internet, the only thing you need. Wouldn't it be nice? It really would, except it doesn't exist. So if you've been around and you've been trying to do this, you probably know by now that there's so much nonsense and so much nonsense out there that you can run out of time and assets before you ever have the opportunity to learn how to trade. But you have to be prepared to make a commitment. You're building a business. There's no plug and play with an ATM in the basement. If you thought that is what this was, you're unfortunately misinformed. Come to Trader Lab. I can't say you'll learn how to trade or you'll be successful, but you will always be informed and you'll get the straight oil from the can. The idea is for you to learn how the market works, why it does what it does, and how you can at times get in alignment with it, and then with structured trades that you have vetted. Again, Trader Lab traders will buy this back here. It is a trade. I might buy this to come back here. It is a trade. But if Trader Lab or anybody cannot operate in a alignment with the perception of trend, then they have no business taking this trade. Doesn't matter the outcome. Because if Now, I'm talking about me. I have a perception that we're in a downtrend. Maybe we're in an uptrend, but I missed it. It might be an uptrend for you, and there's no right or wrong. For me, I'm in a downtrend. So I haven't taken a long today. I'm only waiting for rotations to get short unless the condition changes. So when I say I'm saying is for developing traders, it's outside in. It's not a recommendation. You could be trading long from here and come out the high of the day, right? I'm just sharing with you what I'm doing. And it doesn't make it right. It's just what I'm doing. So in Trader Lab, we have traders who are long here, and we have other traders that are sitting short with a stop over the high of the day. We have traders that would be short here and would cover there. And that's what I'm narrating here for you guys so you understand why. The other thing is, if you took this trade, this was the target. Do we understand why? That is the key to this. Do you understand why? And if you don't understand why, then come to Trader Lab. You can learn this. But just roll your sleeves up and be prepared to learn to speak a language. I don't use any indicators. Now, I do use order flow. These are buy stops. These are selling icebergs. I want to know that. These are sweeps. I want to know that. I want to know up here if I have a sweep. Now, what is the possibility here? If this is too low, this is the fair price. Two possibilities. Reject this or squeeze and come out here. That's what I know. That's all I need to know. Because I can't know anything else. So it's if this, then that. And if I don't clear this, if not, then what? Then back here. That's one part. Or if this, then that. If I clear it, then what? Then the stops above here and here and this outside edge are now on the hit parade. I know that now. I don't know what it's going to do. So if this, then that. And the if not is if I don't get through this. If not, then what? Down there. If I do get through here, then what? Then there and there. That's all I need to know because I can't know anything else. And since I'm a day trader, I'm operating in this. So what do we know? Too low, retail. This is too high, this way. If we cross, that way. Are you guys tracking? Yeah, if you want to visit Trader Lab, there is no cost, by the way. This is available to everybody. Doesn't matter how long you've been trading. Our senior trader in Trader Lab is over 50 years. I have 45, both professionally and out here with you. I've gone down every path and dead end, and probably, I'm going to say in 45 years, you just have more dead ends. And so I grew up with indicators. They were just new. Wells Wilder back, and I started in 1980. We didn't have computers. We didn't have an internet. So, all this was coming out. We used terminals early on when I started trading. They were basically dumb terminals. We actually ran an extension cord out to Massachusetts. I forget what it was. I don't remember. Comtrend or some crazy thing. ADP Comtrend, that was it. And it was expensive. I mean, back then it was like $700 a month. You notice what's happening here? Remember, if this is too low, come back and check this. If this is too high, come back and check this. We get below here, 90% probability. We take out either the first hour's high or low, not a recommendation. This is the Trader Lab. I'm doing this in real time. I'm not predicting anything. I'm sharing how to read the language of the market. If you understand why this is important and why this is important, you would then understand why this is a target for the long. You would also understand that if we get a sweep here And we can't get through here. Remember, if this, then that. If I don't get above it, if not, then what? Then down. Right here, right now. And that's not to say I know anything. I'm just saying is maybe. Does that make sense, guys? And there's a link in the bottom of YouTube, guys, if you're interested in what you see here every day in the stream. Attend the stream every day. Watch the, after the market, hang out. Get yourself a mint julep. Watch the stream. I narrate in real time once we get there. But I also start out because it's not what's happening now. What's happening now is based on everything that happened before. So trading is an alignment thing. It's about what's the market doing? What are the participants saying? Why do we have a market? To figure out what's too high, what's too low, and what's just right. Well, too low, too high. Get it? If I take this out, where am I going? 90% probability, not a recommendation, naturally. Then where? Next target. Not a recommendation, and clueless, and maybe now, maybe never, who knows? It's not our job. What is the job of a trader? It's alignment and understanding possibilities. So the possibilities long there to there, short there, back to here. Support is here. Let's talk about support for a moment. We know where resistance was. We already knew that one. But let's think about support. I'm going to take you into the world of support. Microstructure. So what I'm doing is I'm operating in something called fractals. And the fractals, all it is, sounds like it's so mysterious. All a fractal is it's the same as what you guys refer to as time frames. The difference is in a fractal, there's no time. It's behaviorally based. So right here, I interacted with liquidity, and there was right here, these sellers were absorbed. The volume is sitting here. So what you have here is sellers. Now there's a sweep. That suggests a potential counter rotation. Who knows? Down here, the sellers are below the buyers, going south. See you later, going to zero. Except right here, we have volume. I'm going to just take you over here to show you microstructure, because what I'm doing, it's not complicated, I think. It may look complicated, but what I'm doing is I'm reading order flow. Why do I have an order flow tool? I don't want to wait for some lagging, conflicting indicator. I've ripped every indicator I ever used, and at one point I built systems, so you might call that indicators on steroids. I went the other way because that didn't work. And everything has winning trades, and you think it's just make it better. So right here, sellers are here, buyers are above. This is a potential problem right here, right here. Let's mark it. Now, VHVN. So this was my target coming down. So I see the chop. Now, where's my sellers in control? Let's come back here. See them? Buyers, buyers, sellers get below the buyers. That's a trigger. Now, it's not a get short trigger. I use these microstructures for trade management and triggers. So a trigger is a consolidation or a pause, and then we get the potential for continuation. So this trigger, if you will, or trade management opportunity is here. Now I come down, watch the behavior. I get the same thing here. Sellers are here, sellers are here, and I break high. As soon as I break high, this now becomes support, and I have a sweep. So this is suggesting right here is a potential exit. I come up here. Where's my resistance? Well, it's out here. And then I get the target. I would have no problem being out here. It just wouldn't matter to me. I just don't care about it because there's no precision. So I've had to accept, I don't know, Now let's look at the behavior. So I know this is high volume, and I came out here, fine. Support right here. Break low. Going to zero. The target, nothing to do. Now I get my buyer. I'm above my sellers. They are absorbed. My liquidity is here, and I'm at my target. That's as deep as it gets. Let's watch. So what would happen here is, right here, if you're trailing, you'd be out. And here's the structure. So here, this is, and when we get right here, we come above this. And if we come above this, because there's buyers were absorbed, sellers are below the buyers. Resistance, resistance, resistance. See it? Resistance. Buyers are absorbed, sellers are below these buyers. So right here, resistance. Buyers are here, break below. Going down. Okay, so all this says going lower. Now let's go back and look at the change. Pretty obvious, I think. So right here, once you're above this, if you are holding up, you want to be out of the trade. Now let's see where we are now, what we're trying to do here. Where's resistance? Right here, right? So I get a sweep here, break, pull back. This is a short. You would be entering. Let me show it to you. So remember, when I was narrating this, I said this is a counter trend long, subject to your plan and your skills, back to here, and then either out the top or failure here and then return. Okay? So you guys are following the stream, you know that. Now, again, I really want to emphasize, I don't know what it's going to do. What I have learned from understanding how the market works and the auction is what it might do. That's as deep as this gets. So forget this idea of predicting anything. If you go down that path, I don't believe you have sustainability, because we can't. If you relieve yourself from the need to be right, and you can relieve yourself from the need to predict, you then have accepted that you're in a random environment. Then you change your objective from certainty and confirmation to your objective becomes how to operate in uncertainty without confirmation and manage your emotions, which do not want any part of that. And they will sabotage you because they're trying to protect you. And unfortunately, you need protection from your emotional stimulus, not from the market, assuming you have a trade plan, risk management, adequate capitalization, and have a statistical edge. And it's always random. So right here, sweep. Now I had a sweep here, but I'm not at my location. See, location, location. I see my sellers. These guys were absorbed, and now the buyers test. So this is my test. Where do I want to go? I want to take out, if I can, the first hour's low, 90% probability. And in my world, I perceive we're in a downtrend. And where did we come? Bounce here, right? And then where? We're looking to come out the bottom. Not a recommendation. I hope you're getting something out of Trader Lab. And we're looking for this, right? So we're going for this and out the bottom. Not a recommendation. That's Trader Lab. Use the link in the bottom of YouTube if you want to visit Trader Lab. There's no cost. There's a library of webinars in there. And the primer webinar, which I did a couple of years ago, has over 31,000, maybe 32,000 views. It's a good place to start because it gives you a high-level overview of the actual business of trading, at least as I experience it. And I've done everything you guys have done, and unfortunately more. Because everything that's out in the retail space, I reverse engineered, pulled apart, modified, created my own stuff. I mean, I went really all over the place. And sequentially. And when I started in 1980, this stuff was new. So somebody would come out with something new. I'd look at it, and I'd tear it apart. And everything works. This is the other problem. Everything works randomly. But the difference is the fact that something works doesn't mean it has a statistical edge, because everything is random. If you had no indicators, no charts, nada, and you had a random buy or sell button, you would still have winning trades. Doesn't that tell you something? And I didn't figure it out. I thought, because when I started trading, there were no off-floor traders, or very few. All my buddies were floor traders. So technical analysis was looked down upon as voodoo. I mean, really. And I know it may sound extreme to you, but it really was, because prior to all this math and this technical stuff, it was fundamental inputs. So a report comes out, money supply, remember Trading Places, Beaks with the orange juice, the crop report, all that is what impacted and drove the markets. And they still do in many ways, but we didn't have technical analysis. So it was very much a fundamentally driven business. Now, the other thing is, with technical analysis, you can anticipate reports. So a lot of what I did early on was I was using technical analysis, anticipating behavior. And early on, most traders, at least external traders, not floor traders, different animal, now we have our algos, similar, right? So the market and the business has evolved, but the need to trade with an organized process that has an edge has not changed. Most retail traders think it's click the mouse and play a video game. I think it's not. That's not the business. The business is patience and waiting for locations to interact. That's the business. So what do we know now? We know right now this might be too low, and we know this might be too high. If I come back across here, then these guys are going to get squeezed, and I can come out to the other side. So what I know is I'm going to be taking a short if I squeeze these guys and we come outside. Not a recommendation. I know if we can't get back above here and we get below here, I've got a 90% probability of this and maybe continuing the trend. That's what I know. That's all I can know. Does this make sense? Hope you're getting something out of this, guys. This is the Trader Lab. You can learn this. And remember, the key to all this is having a trade plan. You can learn how to create a trade plan in Trader Lab. There are a lot of examples that other traders have posted and shared in Trader Lab of trade plans, pre-flight checklists. You need to be organized. You need to be in front of your computer an hour, maybe even hour and a half or so before the RTH opens to kind of get the sense of what's happening. The RTH is where the action will be for us as day traders, but the ETH is the last auction. I do trade the ETH when there's opportunity. It's no different than this. If there's range, I trade it. And if it has a structured trade, this is called mean reversion, okay? This is the mean. Now, in a downtrend, what we have to be aware of, now forget, too low. So if this is too high, we come back and check. If this is still too low, we're going to come back here. If this is too low, then that. If I don't get above it, and then I go across. If not, then what? Then back here. If I find too low out here, then what? If this now is too low, then what? Then above here and squeeze. Where might my next trade be? Out here. If this out there, I get a trigger, then what? Then back here, mean reversion. If I get below here and below here, out the bottom. If not, I can stay rotational or whatever it is. This is trading, and the fact is we don't know what it's going to do. So take that load off your brain of being right and predicting. How about if you can't do it? And I tried, believe me, to be, to say it's going to do this. And one of the things that happened early on, I learned classical bar charting at the CME. This is 1980. And a ruler, open, high, close, draw a trend, a channel, head and shoulder, all that good stuff, flags, pennants, and all that. Sure. But measured moves. So I came into the business thinking, oh, great, you can predict where it's going to go. So I spent a couple of years trying to be right. Well, maybe not. Yet it works at times. So you keep doing things to make it better. Is that you? That's all of us if it is you. And you can work on this. I can't say you'll ever be successful in this business, because to be successful in this business is to not do what other traders do who do not succeed in this business. So, and that is about understanding how the market works. It's about the tools you choose to use, how you can gain an edge, how you train yourself. So when you come to the market, you know what you're going to do before it shows up. If you don't know where you're going to take your trades, how you're going to adjust to developing behavior or context, then you're playing a video game. And I don't think longevity is on the list for video gamers in this environment. So that's up to you. But the invitation is open. It's a personal invitation from myself to you to use the link in the bottom of YouTube and come to the Trader Lab. There's no cost. You come to Trader Lab. It's a community of like-minded traders. We leverage our collective experience to do better, including me. I watch these streams every day. It develops unconscious competence. I do replays. Doesn't matter. I've been trading 45 years. What matters is I'm in a competitive environment and I have to be able to perform. It's no different than an athlete who watches films, goes out on the court, if that's what you're doing, practices. And then when it's game time, you're sharp and you have created and reinforced unconscious competence so you can perform in this environment. By the way, this is what these structured trades look like. There's 60 PDFs. You can access these in Trader Lab. There is no cost. In addition, there is one more thing here I got to show you. This is the actual Trader Lab community. This is what it looks like. You can access this. Use the link in the bottom of YouTube. There's a lot going on. Charts are posted, conversations, interactions, mutual support, all of that's going on. And you can access this. There is no cost. In addition, there's the library of webinars, and you should take a look at these. Some of them are real-time narration up to almost 5 hours long. So it's all there for you. Use the link in the bottom of YouTube, and be sure to hit the like and the thumb up on the way out. Thanks for visiting Trader Lab. And remember, these streams are available to Trader Lab participants, plus a lot of additional information and support in the Bookmap server, and a lot of additional education. It's all available at no cost. Stocks, options, crypto, order flow with a high-tier tool like Bookmap, market maker behavior, options behavior, algorithmic behavior. There's a lot more. Swing trading. Whatever your thing is, I think you can improve. Whether you come to Trader Lab or wherever you go, make sure whatever source you're using for education is credible and that you are committed to building a business. It doesn't come overnight. There's a reason that this takes time, because it is counterintuitive and it's going to challenge your emotional states. You can learn about these challenges and you might be able to create some structure to better manage them. Please give that like, and I look forward to seeing you guys tomorrow. Have a super day, and thanks for visiting.